Now, you look at a stock like Amazon, right? This is a building position. It represents a little over 7% of the portfolio. And this is another controversial stock similar to Tesla. And the reason it's controversial, it's not as controversial as Tesla, but the reason it's controversial is because of the valuation of good old Amazon, okay? Because this is, guess what? Another highly valued stock. So let's go ahead and take a peek here. So based upon 2024 numbers, it's trading at a 2024 PE of about 50 right now. It looks extremely high, right? The market trades at 18, 20, somewhere in there roughly, maybe 17. And we're talking about revenue growth of 11.7%. So this is a confusing part with Amazon is here we are, you're paying, closer to a Tesla type valuation, but it doesn't seem like you're getting the revenue growth, okay? So here's what I'll say. One is, this is very important. This is my personal opinion. Analysts are too low with their estimates in regards to Amazon. And I think Amazon is going to surprise to the upside in a significant way for the next several years when it comes to their EPS. This isn't just a 1 or 2 quarter thing. Based upon the job cuts they did, based upon how I'm watching them watch their spending, I believe Amazon's going to come in and report dramatically better numbers pretty much almost every quarter in, quarter out. And Amazon's gone through these periods before where analysts are far too low with their expectations and Amazon just comes in and knocks it out of the ballpark when it comes to EPS. I think they're going to have one of those 2 to 3 year spans here where they are just like killing it. And people are like, oh my gosh, this business is way more profitable than we thought it was going to be. I think you're going to see the e-commerce business margins come around significantly and that business start to become very profitable over this next few years. They've done a lot of the expense work. They've done a lot of that now at this point in time. And so I think you're going to see profitability build in that business in a significant way. And obviously AWS is going to continue to print money, right? We do know that as a money printer business. So, and obviously they own other businesses like Twitch and Whole Foods and things like that. And those are great. Those will throw off cash and whatnot. But I think the e-commerce business, which is such a disrespected business with Amazon, right? I know you see your Amazon trucks going around the neighborhood every day. I know you're probably ordering on Amazon every week, but Wall Street really disrespects that business because they're like, does it make any money really? I think you're going to see it start to make a lot of money and much more money than I think a lot of folks anticipate. And I think they're going to put up some incredible numbers. And obviously the advertising business continues to build with Amazon as well. So it's a crazy stock because it looks expensive. And the revenue growth seems nice at double-digit percentage, but I'm telling you, I think analysts are way off on their numbers. I think the company's going to end up being way more profitable than anybody anticipates. Now, Corsair Game, okay? I am considering selling some more shares of Corsair Gaming. I have already sold some shares of Corsair Gaming, but I'm considering selling some more. Not because I don't like Corsair or I don't believe the stock can do well. It's just I look at this and it's about a $90,000 position in the public count, right? Public count is right now at somewhere between 1.8 and 1.9 million dollars, right? So it's not like it's a crazy big position, but it is $90,000. Now, there's a stock I look out there in the public count. I'm like, I have less money in this other stock that I actually like more for the next 2 or 3 years than Corsair Gaming. And so this is what's leading me to a thought process of maybe selling some more shares and maybe taking this down to like 3,000 shares because I still want to be a shareholder of Corsair Gaming. I'm just looking and I'm like, I think there's a better opportunity. And that better opportunity, in my opinion, is PayPal. And so I'm looking at PayPal, and in the public count, I got about $52,000 in PayPal stock, $90,000 in Corsair. I mean, if you're just going to tell me what stock do I believe is going to go up more and less downside risk over the next 24 to 36 months, it's freaking PayPal, man. It's PayPal. And so that's where I look at the public count, and I'm like, I think I'm going to need to sell some Corsair and put some of that money in PayPal. So we'll see what happens, but that's something I am strongly considering doing. And those are tough decisions. Selling decisions are always very, very tough decisions to make, folks, okay? So last week, obviously, Tesla, Netflix stock got hit really hard, right? They're the two big, kind of like, let's call it non-banks, the two big non-banks to report earnings so far this earnings season, right? That people care about because you've had JP Morgan and Wells Fargo and all the big banks report, but outside of those big banks, you haven't had any huge name companies report. We had two last week. We had Tesla and we had Netflix, two of the most famous stocks in the entire stock market, right? and both tanked, obviously, right? Double-digit percentages down. Netflix went down 10 to 11% the last couple trading days, and Tesla obviously went down over 12% the last couple trading days there, right? Now, when you see something like that, it's very scary, extremely scary. When you start out earnings season and two of the most famous stocks in the stock market just kind of tank like that, double-digit percentages in a matter of a couple days, a lot of people are like, we're screwed. We're screwed. This is it for this earnings season. We are absolutely done for, right? If you have stocks like Tesla and Netflix, it's a very ominous sign, a lot of people assume, seeing that, okay? Now, what I can tell you, as somebody that's been in this market for 15 flipping flapjacking years, okay, I can tell you many times what happens in the stock market is you will have some famous stocks report at first, they go down or they go up, and then for the rest of earnings season, the opposite of whatever ever happened at the beginning starts to happen. So a lot of people assume, okay, Tesla, Netflix went down, all the other stocks are screwed. Microsoft screwed, Meta screwed, Amazon, Apple, everybody's done for, okay? Doesn't work like that. Same thing if these stocks, skyrocketed this week, it doesn't mean all the other stocks. What happens in the stock market is what I like to call a pump fake many times. And it gets you thinking one way, and then it does the complete opposite, right? So everybody's thinking, oh crap, man, if Tesla and Netflix tank like that, we're screwed this earnings season, right? We might be, or it might just be a pump fake. Because I can tell you the amount of times I've seen a pump fake the past 15 years in the stock market is ridiculous. Where you see two stocks skyrocketing that are famous stocks right at the beginning of earnings season. You're like, oh yes, we're looking good this earnings season, man. We're going to be tearing up money. And then next thing you know, everything just drops and drops and drops. And you're like, well, why did I get my hopes up again? This is what happens in the stock market, okay? Because we're acting like the world was much better then than now. Was it really? Because if you go back to the end of 2021 going into 2022, we had inflation that was starting to get out of control, right? We had commodities that were on this mega bull run. We knew, oh my gosh, the Fed's going to have to start raising rates. It's going to do it aggressively. We don't know how fast they're going to go. We don't know how high they're going to go. There was a lot of uncertainties. You look at the world now, you have a CPI at 3%. You have, if you look at trueflation, we're in the 2s right now. And so there's a very much possibility over this next couple months we could have 2s for inflation, which is right where the Fed wants us. The Fed, if you want to say they're not done, you could at least say they're very close to being done, right? So you look at it from those factors and you say, well, is the world really a scarier place? We've already had a deal with Russia, Ukraine, so that's a situation, right? It looks like the U.S. and China are trying to be a little more friendly, and we've gone through all these rate increases, and the economy's held up decent, which has been kind of shocking, to be honest. Even for bulls, it's been pretty shocking how well the economy's held up and how low unemployment has stayed. So to say it's a scarier world now than, let's say 18 months ago, 19 months ago, 20 months ago, I don't know about that. If anything, it's probably a more comforting feeling.